Hey, everyone. So this week it was announced that we could see interest rates on the rise in the near-term future. Inflation, 40-year high. S&P 500 and stocks like Tesla are starting to tumble, and rumor has it the small cap space is in for a rough 6 months. We dive into all this in our latest Trade to Black podcast. Hey everyone, welcome to the Trade to Black podcast for this week. I'm your host, Shad Dales. We are a division of the Dales Media Group. Before we get started, as usual, all views on the Trade to Black podcast and the guests on this podcast are purely opinion. You should not treat any opinions expressed by us or our guests as investment advice. The views on this podcast are solely intended to be informational and are not investment advice. Joining me as usual, millennial entrepreneur Anthony Varrell. How are you, brother?
Doing well. Market's a mess. The party's over.
She survived.
Yeah, COVID's over, and so's the liquidity party.
Ben, lead financial writer at TDR. How are you, brother?
Doing well. Watching the rebound in real time and watching the fade in real time. So we'll get into that in a sec, but otherwise doing good.
It's good. Well, here we go, gents, and I don't know what to say up to this point. Cannabis, MSOS made an all-time low this week. Volume surrendering in the classic sense and did not happen. And value buyers push prices back to $22. So, Ben, what can you share with us based on this week's performance?
Well, the biggest takeaway I had is that we hit the low in MSOs at 2045, and that was the big outlook of last week, the big thing I was looking at to start the week. It happened, got it down to about 1955, but as you mentioned, we didn't get that classic capitulation on volume, right? So that was my biggest takeaway. That volume capitulation never happened. I was watching it in live time, and it was just like a normal selling, right? It was normal selling. It was a balancing act, and eventually it got pushed back up when the broad market made a V bottom, right? So that pushed prices back up to 22. It looked like the lows were maybe set, but I don't know. I mean, you have to wonder because we didn't got that classic, washout bottom where everybody sort of throws in the towel and gives up. But we also never got that accompanying, huge volume surge on the upside either, right? So now things are kind of swinging back to the low. So we'll see. But, that was the big takeaway. I bought the bottom, like I said I would last week at 2045. Did well. Cannabis stocks I was in went up about 10 to 12%. And, I got a free look anyway.
Anthony, are we at the stage now where it's sell on the rally and don't buy on the dip?
Yeah, I mean, I'm not buying anything right now. Absolutely nothing. I'm in 50% cash for the most part. I mean, I don't think that there's going to be a bid on this stuff for a while. I think everyone's scared shitless of what's going to happen in the macro environment. And I mean, I'm kind of just waiting and seeing. Like, I still would put money in tier ones. They're going to make money. No, they're not going to make money. They're profitable. They're good long-term viable investments for companies that have access to capital, and they're going to be here. But as far as deploying capital in the market right now, I'm not buying anything. I'm staying with my MSOS leaps, and I'm not increasing any of my exposure until something starts to go right in the macro market.
Yeah. So Monday, sorry, you're going to say something, Ben?
Yeah, I was just going to say, I think what Anthony just said there encapsulates what a lot of investors are feeling right now. Unfortunately, there's been so many false starts in the cannabis industry that no one really kind of believes it. Everybody's sort of in wait and see mode, right? They actually want to see a bill table. They actually want to see a bill go to floor for to the floor for a vote. They actually want to see tangible things, right? I mean, just today, Chuck Schumer was out for. Yeah,
I think we're
just
past
today,
that,
Chuck Schumer was out for like the 45th time saying that we're excited to bring legislation, voters want it, blah blah blah. But he said that so many times, it's just like empty platitudes right now. People want to see action. They're so sick and tired of like bullshit tweets and platitudes.
Yeah, I think we're past that to an extent, though. I mean, especially when you look at just the macro fear of the interest rates going up. I would love a regulatory catalyst, but yeah, I think we're looking at a little bit of murky waters.
Yeah, I hear you. Monday, Cantor Fitzgerald Managing Partner and lead cannabis analyst Pablo Zuanic said he does not expect major regulatory movement in 2022, and he called the cannabis sector dead money. Anthony, do you agree with our friend Pablo?
To be honest, I was joking about it before the beginning of the show when we were talking about it, but I kind of agree with him now that I'm really thinking of it. I mean, you're seeing a lot of high growth sectors, cannabis, crypto, psychedelics. They can't catch a bid. They're completely risk off. That exposure is gone. And I mean, their funds and institutions and smart money right now is but they're deploying their capital into vehicles that actually make money. They're deploying their money into vehicles that actually pay dividends. I think that stuff is going to get warranted. Just look at Cathie Wood's ETF. We're probably going to ride with that stuff for a while. We're very high growth. I mean, we're here to stay. But I think the capital markets, there's going to be a lot of chop, and it's going to be a sideways market for a while until the macro environment gets their shit together.
Ben, Amazon threw their support behind Nancy Mace's cannabis bill to legalize tax cannabis, notable in the sense that Amazon has a big lobbying power in Washington, to say the least. What'd you make of that announcement this week?
Yeah, I thought it was a very positive announcement, obviously. I mean, when Amazon, one of the biggest companies in the world, gets on board with legalizing cannabis and supporting a bill coming out of the House that would basically legalize and tax cannabis, it could be nothing but a good thing. I mean, it has to be construed that way. The problem is, like Anthony said, I think investors need more than just, something kind of surface level like this. I mean, it's a good start, but until we get a bill actually, tabled, supported, going to get a vote, goes through committee and things like that. Until we get really into it, immersed into it, I think investors need to see more, right? I mean, but that being said, obviously it's great news, and it just shows that long term, we all know where this is going, because when Amazon gets on board, it's going to happen eventually. It's just a matter of when.
If Amazon Prime starts delivering cannabis, that'll definitely be the day.
to say the least.
It's amazing.
I mean, they got to have some interest. He's not getting behind it just for shits and giggles.
Jefferies came out this week and slashed price targets for Tilray from 22 down to 17. There's some notable names. They're actually kind of aggressive on Organigram, but even Hexo, like yesteryear, like these are companies that obviously made news 3-4 years ago. Reality's coming as it's very, the Canadian adult market is very, very much speculative at this point right now. But do you agree with Tilray being slashed from 22 to 17, Anthony?
Tilray, no. I do like their international business. I mean, as far as the Canadian market goes, I think Tilray should probably just forget about it. I mean, I just think they should forget about the conversation around it and how they're not growing their market share, because even if they do start to capture market share, it's not really going to be representative of even their market cap now. I mean, they've got a stranglehold in the United States. They've got the European business. I mean, Tilray is a global cannabis company. I mean, I still like it. I bought it, and I'm down on it significantly, and I'll probably enter the space again. I mean, and also Hexo. I said that I thought ReadyCan was a transformational acquisition for Hexo, and that happened to be completely wrong. When, as reflected by the latest price target, I would have never thought that Hexo would have price targets under $1. I think that's a feat in itself.
Crazy.
Yeah, I mean, it's absolutely ludicrous. But the good thing is the Canadian market's actually doing well. Revenues are growing month over month in flower sales. It's the craft guy that's winning, which I'm all for. Let the little guy win. Let the craft guy win. Let who's good at growing flower and good at producing quality products. Let them win. That's how you win a consumer packaged goods arms race. And I mean, apparently it's working. Yeah.
Yeah, I think you need that, in a limited market where you can't generate sales internationally, and you're just limited to basically, a population of 36 million, which is Canada. You can't have all this overhead. And I think that's really caught up to Hexo and some of the big guys like Tilray and things like that. There's too much CapEx that's gone into this, too much OpEx into it. So you got to be flexible, and you also have to have flour that is supreme, right? There's so much supply out there. It just like you have to have low OPEX, low CAPEX, and super good flower. And those are the companies that are succeeding in today's environment in Canada. And unfortunately, I can't say that Hexo really has all those ingredients going for it right now. So
no,
it's sad to see, but it's sort of the reality.
Yeah.
Let's shift to psychedelics. We had some decent news this week. Market again stays flat, but atai Life Sciences is making some strong news this week, and this company and stock needs it. They announced the launch of Invyxis, which is a newly wholly owned platform committed to developing new chemical identities, otherwise known as NCEs, to further pioneer next-generation mental health treatments. The exact medication, obviously, this is going to garner interest from Big Pharma. So the new Invyxis platform has also entered into a strategic collaboration with Delrida Drug Discovery, which specializes in the discovery of small molecule therapeutics. Anthony, how big do you think this announcement is?
I mean, I think it's great for atai. I mean, they're just fortifying and expanding their IP and their capabilities. And I mean, what you're going to need to do in the psychedelics sector is create derivatives and unique compounds, leveraging these NCE techniques. I mean, I think it's great.
Ben, what was your big takeaway, and I think most importantly, the big takeaway for investors involving this announcement?
Yeah, no, I think it's. I echo Anthony's statements exactly. I mean, NCEs are where it's going to be at, and the fact that they're focusing and priming their business in this direction is nothing but a good thing, right? And I mean, unfortunately, it didn't get a lot of traction in from a capital markets perspective, but it's just bear market doing bear market things. So
it's crazy.
I think investors just have to ride it out. I mean, in this environment, you can't really expect good news to be rewarded. Unfortunately, we saw that with maybe our next topic of discussion, MindMed, which basically came out with the first LSD study in 40 years, which is approved by the FDA with their new their IND that got approved by the FDA, and it went up like 35%, huge volume, and then right back down 3 days later. So, it just, again, bear market things.
Yeah, that just tells you the sellers are out. People are trying to pare down their exposure. It's going to keep happening.
Yeah, and when you see
where
things
are we,
like
guys?
That's literally what we just said. That's literally what we just said. Don't buy the dip, sell the rally. That's a perfect example of that.
Yeah, like when you see that. Sorry, go ahead, Chuck.
Go ahead, Ben.
Well, I mean, just Monday.
I just want to add, like when you see that, when you see like that sort of selling into it to that extreme, then that's how you know that you want to have extreme caution with entering any sort of positions, because that's a classic bear market, sell into the rally on really good news, right back to where it was. And when you see price action like that, even if it's not in your own stock, your own security, then you want to be super cautious, because that's just telling you right now the market is just in sell everything mode right now. So that's all I want.
People are spooked. Like, people are really spooked. They're trying to pare down exposure on their portfolios. A lot of it.
Yeah. Yeah, I wanted to ask, maybe it's not the right question as we talk about cannabis and psychedelics, but where are we right now in the small cap space? Obviously, as you said, people are spooked, but where do we see this going in the next 6 months? You have any clue?
I mean, you can take that, Ben. I mean, I think the next 6 months is going to suck. I think the next 6 months is going to be terrible for the capital markets, especially for small and micro cap. I think it's going to be a complete risk off environment. I mean, people are going to wait and see what happens at the March Fed meeting, where Powell's going to raise rates. And if he does 5 interest rate hikes this year, I mean, he's got to one way or another. Like, it has to happen. Like, we can't just sit in this 0 rate environment. It's not going to happen. And it's the people that are going to take the brunt end of it. It's going to be growth. It's going to be crypto. It's going to be small caps, and it's going to be micro caps. That just get shredded for the next couple of months. But I mean, it's cyclical. I mean, the capital flows back in every time.
Yeah, you don't want to get caught in the classic value trap here, because I mean, it's been a bear market in small caps for like at least like 9 months. I mean, obviously the broad markets have risen to record levels. There's like, I don't know, 6 records in the S&P 500 last year, but it was all driven by like the Apples, Microsofts, Amazons of the world. the small caps just got their shit kicked out of them for most of 2021. And I agree with you that, it could happen again. I mean, if they're getting the shit kicked out of them, even when the broad markets are making new highs, then they're going to get the shit kicked out of them when broad markets, if they retract like they have been so far in 2021.
100%. I mean, just look at things like Moderna and Teladoc and Zoom and Peloton. I mean, they're all down 70 to 80% off the highs.
Yeah.
Like they've gotten destroyed. And I mean, no one talks about that, but CNBC goes fucking bananas when Ethereum's down 20%. I mean,
are they supporters? Do they like crypto or no?
Yeah.
Oh, CNBC loves crypto. They had crypto night in America on last week. It was like a dog and pony show, like elementary hour-long special for crypto.
Well, you brought up a point about the S&P 500, Ben. I think as people look into it a little bit closer and then like how it has performed, it really has been 5 or 6 stocks that have really pulled a lot of the weight. Do you think people, in addition to feeling spooked out right now, are starting to understand and read into that a little bit more, that it's not necessarily S&P 500, it really is 5 or 6 stocks? Look at Tesla earlier this week. Elon Musk got snubbed by Joe Biden. He lost $24 billion in one day. So ultimately, where are we at?
I think we're just at a place where this is all being uncovered, right? It's sort of like the emperor has no clothes, like in terms of, sort of covering where the market's going, the strength of the market, and with the underlying strength not necessarily being there. I think that's sort of getting more and known by the public, right? The mask is coming off, especially during this recent decline where everything's just getting the shit kicked out of it, and then the top dogs are moving down. I think it just sort of unmasks everything. But you see a lot of this chatter online. I don't think it's like retail investors mostly know about it, but over the last say 3 or 4 months, it's been really known throughout social media circles. A lot of it's been sort of put online. So if you're any sort of professional investor, they kind of know that this, divergent price action between the top players and like the mid caps, small caps has been happening. So, yeah.
Anthony, when we shift to crypto right now, obviously we see it's very volatile. Prices continue to drop. But despite the volatility in crypto, when we look at the DeFi market in terms of total value locked, it has actually increased in January. Why do you think DeFi has held up better than, say, crypto in terms of asset prices?
Oh, because people are trying to find safe harbor for their crypto that they're going to get a yield on. Even when the coin's crashing, if they can still get an APY for staking, that's where they're going to go. But, I mean, the DeFi space is somewhere I wouldn't be right now. I mean, you've seen the Olympus DAO has gone from like 1,000 to 60. A coin, Wonderland, which was another DeFi protocol on AVAX, that's completely cratered. I think DeFi is very good and advantageous to leverage, but you've got to be very, very careful as to where you're staking and what protocols you're actually interacting with right now in the DeFi space.
Now, Anthony, I have a question with DeFi here for a second. But I've noticed that the DeFi market's actually held up pretty well, better than the broad crypto majors during this decline.
Because everyone's staking their coins. The supplies are all offline.
Okay, so is there some sort of reverse correlation there between
think
crypto
about
market?
it though. Think about it though. In the DeFi space, for me to stake, the thing with crypto is you actually own your coins versus dollars, which just go in there and then you've got digits in your bank account. So when I've got 200 Uniswap tokens in my wallet, when I want to stake those and generate yield from them, I'm literally giving that market maker my coins, so they're out of circulation. So it's extremely advantageous for a DeFi protocol to be giving steep APYs and steep yield. So I'm literally sucking up the circulating coins, the supply of my crypto, which means there's less people trading it, and you obviously mostly see positive correlated price action with like a heavily staked DeFi protocol.
Okay, so are yield is the risk of your coins of something happening, is that risk going up when crypto is crashing, or is actually risk is actually coming lower based on the reasons that you just mentioned?
Oh no, with DeFi protocols such as like Uniswap, SushiSwap, Ethereum, yields are negatively affected on the way down as well. You can start losing money on the way down. It's not like a guaranteed yield just because you're staked. it gets really messy if there's sharp drops to the downside like we're experiencing now.
So overall, when we look at market valuations, do you see right now, Anthony, the crypto market, do you see value in the crypto market right now at these prices?
I'm in 99% cash in my crypto portfolio. I turned the entire thing into stable coins. My only exposure right now, which is still decent exposure, are my NFTs. I haven't sold any. I think I have a theory that a lot of smart money right now in crypto is not selling. If anything, they're flipping to stables, or they're storing their Ethereum or storing their other coins in NFTs. Because, I mean, you're not seeing a lot of selling in NFTs. You're seeing a lot of buying, and you're seeing price action go through the roof. Even though Ethereum has fell off a cliff, it's at $2,500 versus $3,500, which it was 2 weeks ago, and $4,500, which it was 2 months ago. NFTs are almost like a hedge right now against the market.
One thing we continue to see is massive amounts of money being allocated to venture capital and cybersecurity in the tech industry. What about the crypto space? Are we seeing a lot of venture capital being flown into that space right now?
Yeah, I mean, I'm meeting guys every day on Twitter that are running $100 million and billion-dollar funds. There's Andreessen Horowitz has pretty much gone full crypto. I mean, Paradigm is a multi-billion-dollar fund. There's companies in crypto. Sam Bankman just raised $500 million at an $8 billion valuation 2 days ago for FTX. There's institutional capital flooding into this sector. Like there's a rumor going around on Twitter that Joe Biden's apparently coming up with some sort of executive order to regulate crypto as some national security issue. I mean, it might be a rumor, it might be whatever, but they're not going to ban it. If anything, they're going to start regulating it. Like, it's too big to fail right now in this country. But there's an immense amount of venture capital flowing into space.
If you're 99% cash and you look at opportunities like this, what's the big takeaway then? If you're an investor in this space, and again, this is an investment advice.
I'm waiting for Ethereum. I'm waiting for Ethereum to go below $1,800. Once Ethereum goes below $1,800, I mean, I'd probably start to buy it. I mean, there's things such as Chainlink that if it goes anywhere under $10, I would buy it. I mean, in a sick kind of way, I've really been looking forward to this opportunity. I mean, I didn't want to. You're going to buy at the top, but these are buying opportunities as far as I'm concerned. This isn't a crypto winter. This isn't some nuke going off and just crashing crypto. Like, we've seen this before. Bitcoin has had these crazy drawdowns. Ethereum's had these crazy drawdowns, and it cycles back up. And if you look at the fundamentals, you look at the on-chain analytics, I mean, everything is going to the upside. The amount of wallets, the amount of unique wallets, I mean, the volume. The only thing that sucks right now is when you look at the on-chain analytics, it's a lot of small wallets selling to a lot of larger wallets that don't actually have their assets on chain because institutions don't do that. They're not keeping $50 million in Ethereum in a fucking Coinbase account. It's all in cold storage or out of custodian. A lot of the retail guys that bought in the $4,000 range and in the $3,000 range continue to sell. And it's going to keep happening until all that value is destroyed and all the liquidity is sucked into the whales accounts and into the larger accounts. And then it's going to be cyclical again, and we go back to the upside. Because, I mean, if it's anything, the fundamentals and the use cases are not subsiding. I mean, they're just getting bigger, and the venture capital, like we just said, just keeps pouring in.
It's amazing how the big guys just sort of come off the bid, right? When they want to, when they sense a market is in decline, they'll just retreat and get all the small guys who are worried, who are buying at the top.
Oh yeah,
just to drip out, and absorb it.
100%. They shake the shit out of them every time. There was a rally after Jay Powell, or yesterday actually. Ethereum rallied about 10%. I sat on my hands. I was like, this is a complete fake out. It's going to come back down. I think we're at like 23 something right now. But I mean, people like Novogratz and like guys that are running institutional like crypto companies, they're not selling their crypto. Like, they're just hedged against this. And they're sitting there buying and buying and buying. I forget who it was, but I was talking to someone yesterday that was watching the on-chain analytics for Bitcoin, and one wallet kept buying 15 million. And it might have been Michael Saylor. One wallet kept buying 15 million in Bitcoin every 20 minutes for like 12 hours, just sitting there buying and buying and buying. Like, the big boys are not they don't sell. It's
so you looked at the 6 month outlook for small caps. You think is going to be terrible. You're looking to get into Ethereum at 1,800. What do you think the outlook is right now? Like, there's a lot of volatility, as we've said. Stories you hear about Russia, Ukraine when it comes to mining and stuff like that. But what is the outlook if I were to ask you in the next 3 to 6 months pertaining to this industry?
I mean, the only thing, to be honest, the only thing that matters right now for crypto, especially for the price action, is the broad market. It's completely correlated to the NASDAQ as of right now. Like, everybody that's in crypto, they wanted mainstream adoption. They wanted institutional money. They wanted to be taken seriously. Yeah. We made our bed. We got to sleep in it, because this is what happens when economic conditions deteriorate. Crypto's going to trade in lockstep with the NASDAQ. If the NASDAQ craters or there's some sort of financial crisis, like, crypto's probably going to go down just as far. I don't doubt that at all. So, I mean, I'm not getting off of any kind of nervousness until the broad market stabilizes, because I do believe that it's going to trade exactly in lockstep with it.
Careful what you ask for, right?
Yeah. I mean, it's why Ethereum got kicked in the balls from 4,500 down to sub 3,000. Yeah. Institutional money came in. They were buying it all the rally. They were buying all of it. Altcoins, Bitcoin, Ethereum, just riding the wave. And then as soon as the risk off environment happens, when Powell comes out and says, we're telegraphing we're going to raise rates, those guys don't sell the S&P. Those guys don't sell any of their dividend yielding stocks. Crypto's gone, like, right off the bat.
Yep.
And then that's what
happened.
It
makes perfect sense, right?
Oh yeah, completely. I mean, if you're a smart, if you're a smart money manager, that's what you do. Yeah.
Yeah, once they pull the punch bowl, I mean, they're not having and the discount window closes up, then they're not getting all these risk-free funds going that they just throw into the stock market and push everything up for weeks, months on end, right? So once the punch bowl is gone, they're not getting this free discount money anymore, right? So then the party's
as far as I'm concerned, the party's over. As far as easy liquidity goes, and stonks only go up, and FinTwit,
really?
And all of the that's done. It's finished. That whole market is finished.
Yeah, we're in a different paradigm now, I think.
Yeah, I don't like to act like I know everything, and I could be very wrong, but I could almost guarantee you that meme stock mania, just everything always goes up, that shit is gone. It's done. Not happening. Yeah. And Jay Powell had to do that. They need people to go back to work. Like, they need people that all think that they're Warren Buffett sitting in their homes trading, that quit all their jobs, need to go back into the workforce so we can get to being productive again. I mean,
we live in interesting times, don't we?
I mean, but that's what that's what I believe the Fed's secretly doing. Like, they're trying to basically take away the punch bowl and get everybody back to some sort of normalcy.
Except they probably acted too late, but that's probably a topic for.
I think they have acted. Show, right? I think they have acted. They've acted way too late. I think they've acted too late, and it's going to be there's going to be some reckoning going on in the market. I don't think we've seen anything yet as far as the downside goes. I think it's going to be real. I think it's
interest rates on the horizon.
Yeah,
40-year high in inflation. We got truck drivers basically piling up across the country in Canada, which doesn't get a lot of attention right now, but we are in interesting times, to say the least.
Yeah.
Yeah.
I mean, 100%. Apple reported a hell of a quarter today, which was good. Microsoft as well. But I mean, we can't just have this concentration at the top. It's unsustainable.
And you know what? We're probably due. Like, if you look at just like, obviously there's no guarantees with this, but there's usually a crisis every decade, right? So you had, like, in 2000, you had the NASDAQ crash. In 2009, you had the housing market bubble. In 1991 or 1992, you had the Japan bubble, which created market turmoil. And then in the early 80s, you had something. So we haven't had a real huge, market calamity event in the 2010 decade. So I think we're due, right? I mean, this is like 13 years after the housing cycle, and now everything's come to roost, right? Easy money policy basically ever since, 2011, a couple years after the the bailout, or even before, right? So now I think it's all coming to roost. So you got to be careful.
I mean, it kind of sucks too, because Powell actually tried to raise rates in 2018, and Trump basically threatened to, like, beat his ass. Like, Trump basically told him to fuck off. You're not doing that. But I mean, Powell was trying to raise rates and start to get everything normalized, and then COVID happened, which is no one's fault. But still, I mean, I do think we are too late, though, as far as averting any kind of crisis is concerned. Yeah.
Well, if anyone's happy in North America, it's got to be Kansas City Chiefs fans. What'd you guys think of that final 2 minutes?
That was probably one of the best football games I've ever seen.
There was
Period.
3 comebacks within 2 minutes. I couldn't believe what I was seeing.
Yeah.
Like it was crazy. And then with the ball on the 25-yard line after a touchback on the kickoff to get it within field goal range with 2 plays in 13 seconds. Are you fucking kidding me? I've never seen anything
I knew
like
that
that.
was.
It was
I
incredible.
had a feeling he was gonna do that.
I have never, ever, as a fan, when you've got 13 seconds left and the ball is on your own 25-yard line, I thought a 5-yard slant pass would be a touchdown because of Tyreek Hill. Like that.
Yeah.
That's just how explosive like that offense is. But man, oh man, I feel so bad for Buffalo. I hate the overtime rules.
They're going to be.
I would have liked to.
Yeah, they're going to be elite for a very long time. Yeah, Josh Allen's going to be a fucking elite quarterback for the next 10
Unreal.
years. He's built like a running back.
Would you change the overtime rules after last Sunday?
I said that earlier today. I would 100% change the overtime rules.
I think we want to make an announcement too. Anthony, you've launched with what's called Guaranteed Money, which is a sports betting business show that we launched this week with national broadcaster Ryan Doyle. But you guys are going to be talking a lot about just the business side of sports betting and a lot of the money that's being flown into the capital markets. But what were some of the things that you guys plan to discuss? Yeah,
it's going to be focused on business, basically the finance of sports, the financial aspect of sports wagering. Today we covered DraftKings, FanDuel, Penn, a lot of like analytics around sports and really just the business fundamentals and like the interesting side of sports, everything that happens off the field from a financial perspective.
Guys are going to be heading to Vegas for March Madness, I hear.
Yeah, that'll be fun. Hopefully the first week. That's when the most action is. I mean, basketball starts in Vegas at 8 a.m. So that'll be a pretty fun experience live from the sports
That will
book.
be fun.
Oh, yeah.
Guys got some big-name guests, including Derek Stevens. He's got largest sports book in Vegas, but I know you guys have got some big guests lined up, and wish you guys nothing but success as you move forward with that. Gents, I think that's it for this week. There's more we could probably talk about, but we don't want people to get too sad the way things are going, but I appreciate the time.
Definitely try not to be too gloom and doom, but, I mean, yeah. I'm pretty spooked right now as far as the market goes.
You know what? Stay defensive. Everybody, if I have one party message, I would say stay defensive in your portfolio. There's nothing wrong with cash. Cash is a position. You don't always have to be 100% exposed in the market. Look at Anthony; he's 99% cash right now. Yeah, that's fine. Cash is a position. People forget that. They always think they have to be exposed into something. It's not true.
Oh, no, I'm sleeping real good at night right now for my crypto account, 99% cash.
Yeah.
Throw FOMO out the door. Stop and pause, right? That's the position.
If you're not disciplined
guys,
in this market, you're done. Awesome. Let's talk next week.
Okay. Take care.
All right.
Have a good one.
There, guys.